We're going to do a brief video on KGC, Kinross Gold, KGC Stock Price Today. We've got a daily chart for you of Kinross Gold here, and it's got a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. Let's take a look at this stock real quick. We can see and we note significantly that this price this blue 200-day moving average has been in a steep decline for quite a while. We could start it around here on April 21st. That's a long bear market. And this stock officially entered its bear market around June of 21. I said April 21st, I meant April 2021, and entered the bear market in June about 2021, and it's been in a bear market ever since. It's in a bear market right now. We can see that it's closely followed the 200-day down, testing it a couple times here in November 21 and then again in April of 2022. The stock doesn't really respect the 20-day moving average. You can see it's oscillated through it many times. Even in a downtrend, it does not respect it, but it is respecting this 200-day, which is kind of interesting. Normally you don't get a 200-day that the price sticks and hugs this close to it, but that's exactly what's been going on. Also, you'll note it continues to make lower lows, and that's been unusual for this bear market for a lot of different stocks. This particular stock is getting away from the 200-day, rallying up to it, but then making new lows as it comes off of it again, and that's pretty unusual. You can see it's made its most current low right about here, the 15th of July 2022, at around $3 a share, if I've got it highlighted properly, and it's been in the trading range oscillating around $3.50, $3.40 ever since the middle of July. It's still in that range. Today we've got this Kinross Gold trading up 7.5% on 31 million shares. It's $3.53 at the moment. Daily volume normally 17 million shares. We're already at 31 million shares, and it's about 2:30 on Monday afternoon. So what's going on with this stock? Essentially, we're still, even though it's been a long time, we're still in a bear market on this stock. We have an enormous amount of space between the 200-day moving average and the price. Everything on these penny stocks, and I'm going to call this a penny stock, it's really, I guess it's technically not, but I'm going to call it that. These low price stocks, everything's a little bit different on them, the way they trade. Usually it's rare to get one that trades like a regular high dollar stock, but anything below $5 can have these kind of little idiosyncrasies in their movement, and this one's no exception. This distance here from here to here, from the 200-day to the top of the price, is significant, and you'll notice every time we've gotten some kind of distance about that much, we rally back. Even here we didn't even get that far, we rallied back to the 200. So there's a very strong argument to say that this stock's going to rally back up to the 200-day. And especially when you're getting this kind of volume down in a trading range, something's going on with this stock. My best guess, and that's all it is, it's an analysis for entertainment purposes, only my opinion, is that this stock could easily get to $4 and $4, let's say, and 15 cents here by the first week of October. I don't see that being a huge problem for this stock. Let me check here real quick. Yeah, it could easily do that. $4 is a chip shot, $4.15, something like that. I'm not saying it's going to do that, but I'm saying it could easily do that. Your moving averages here are basically worthless in terms of the 5 and the 20. They're essentially, the 20 is essentially sideways, and on a trader's market like this, the 5-day is not any help at all. Our significant moving average here is the 200-day. That tells us we're in a bear market. We're getting extreme volume on this stock today, and that tells us there's something going on down here. I'm not getting into the fundamental side of it, but you'll notice that essentially our bottoms are higher, and that's not giving me a huge amount of confidence. What's giving me confidence is this gap. Whenever you get a big gap like that in this stock, you'll notice it fills it. It goes right back up to the 200-day, and so I think realistically $4.15 is doable. By the time it gets there, the 200-day moving average will be probably about 425-ish to 430-ish. So I think 415 is a reasonable price target for the stock. I'm not saying it's going to do that. I'm saying that's what my analysis of it says is reasonable. Keep in mind, in a bear market, you can have gaps up and down. This stock could easily break through its July lows and get below $3. But my best guess right now, and again, for entertainment purposes only, target price of this stock is about $4.10, $4.15 in the next 2 weeks, maybe 3 weeks. Now, what needs to happen for that to happen? We need to see a continuation of this extreme volume push this stock up a little bit. We need the bottom to come up a little bit. We don't necessarily need to make too many highs. This is a very this range for this stock today, it's not huge. It's still about 50 cents, but we need to get this price, the bottom, the daily bottoms above the 5-day and above the 20-day, and it's just not doing that right now. So we need to get the 5 and the 20-day below the price. That's what we need to do. And if that happens, then we can push up to the 410, 415 range. If that doesn't happen, the stock's in danger of breaking down because it's in a bear market. But keep in mind, you are in a bear market on this stock, and you're going to be in a bear market in this stock for as far out as I can see, at least another month at a minimum. So again, my opinion, but you need to get those moving averages under this price before it can have a chance to rally up to the roughly 410 level. So that's where I am with it right now. Again, for entertainment only, all in my opinion. RBAM Research does cover Kinross Gold. Let's go down and take a look at it. We put out 190 entry prices every morning, cover 190 stocks for buys only 1, 5, and 20-day holding periods. These are trading days. And let's take a look at Kinross. This is for the 19th today, which is Monday. And Kinross is right here, KGC. Doesn't have an entry price, which is consistent with my analysis that this stock is in a bear market, and you got to be really careful buying a stock like this. You'll probably go back and forth on this stock. Some days you'll have zeros and some days you won't. Zeros means that it does not think it's a good day to buy, and Kinross is up 26 cents today, so no big deal. But you want to keep a very careful eye on the downside of this stock, and because it is in a bear market. If you're interested in these algorithmically generated prices, you have 3 columns every day for the stocks. The way it works is you buy the 1-day column, assuming your own analysis says it's a good idea to do so, hold till the next trading day and close out at a loss, or take your profits as soon as you get them. Same thing for the 5 and the 20. If you bought in the 20, again, assuming your own opinion said it was a good idea, you buy in the 20, excuse me, hold worst case 20 days and close out at a loss, or take your profits sooner if you get them. And we cover 190 stocks, longs only, at rbamresearch.com. You get them absolutely free, no credit card required. They come out before 7 a.m. Monday through Friday. In addition to that, we cover the major forex pairs, BTC crypto, and the most liquid futures. There's a link in the description below. You just go to rbamresearch.com, sign up, and get them absolutely free. If you like this video, please click the like button. If you want to subscribe, please do that as well. We'd love to hear what you think about moving averages. Love to hear what you think about that 200-day moving average and the price hugging it. If you have some comments on it, please put them in the comment section below. If you don't like them at all, tell us about the parts of technical analysis you do like. We think moving averages are great, but we think our algorithmic entry prices are more interesting and more precise. Keep in mind, everything you've seen or heard here is entertainment purposes only. You can't use our entry prices or our analysis for anything other than entertainment. You have to do your own analysis, and you definitely trade at your own risk.